I want to talk about some tax fun lessons that help shape how we see taxes. So let me take you back to when my wife and I were newlyweds. And it's one of those kind of classic mistakes, especially when you're first married. And I'd call it a rite of passage. Rite of passage is following, kind of filing your taxes, yes. And it's something that we needed to figure out how to do, because this was the first time that we had done it as a married couple now. And yes, we're adults. And it should be easy. We should be the fact that since we're independent, we can figure all this stuff out. But here's the problem. We filed our taxes, married, finally, jointly, but our parents had claimed us as dependents. And we actually needed to figure all of this out because we were supposed to be paying a lot more in tax than what we did. And that's where you think it would be a little bit easier, because how hard can it be? You're newlyweds, we really don't have much income. It should be very simple, but it wasn't. And we had to really work with the IRS to figure all this out because, well, if you don't do taxes correctly, the IRS is not amused. And so yes, I would call us in tax limbo. And we are trying to figure all this out, whether it's married filing jointly or whether our parents were able to claim dependent status for us. And it took a long time to figure out. But in there, we learned a valuable lesson. And it's stuck with me today. That yes, taxes can be complicated at times. There are rules, there are exceptions, and then there's all the fine print. And if you don't know how it works, then it works against you. But that's if we understand the system, we can make it work actually for you. Now, fast forward to today. And while I still smile at some of the funniness that it was with having to go through this complication and just kind of getting started in a marriage, it really is a perfect metaphor for how taxes work. And every year the tax landscape changes. And 2025 is no exception. The federal government has announced adjustments across the board. And the rules, again, can be complicated. But there is some opportunity here. And if I give you an example here, we start with the standard deduction here. It's a small bump that they are giving us for taxes. Married filing jointly has gone up $800 to about $30,000 for this year. And single filers has gone up $400 to $15,000 as a deduction this year. Now, yes, it may not sound like much this year from last year, but those adjustments can add up, especially if we take a look at all the different elements that are out there. So when we take a look at the deductions, and then we take a look at the tax brackets, we can figure out all of the ways that we can see the differences in how it can really start to affect positively your taxes. So for the brackets themselves, there are 7 remaining brackets, and they're all the same now as what they were for 2024. The only thing that's changed is that the amounts within the brackets have been inflation adjusted. So this means that the income threshold has shifted. And if you're in the 12% bracket, that extends up to the $48,475 for single filers and $96,950 for married filing jointly. And if we know where we fall within the brackets, it can really help save you a lot of money. And that's where planning comes in. When you can plan where income is coming from, that's how we can actually lower brackets. So yes, remember when my wife and I had to claim our taxes, because I surely do. Well, that metaphor and what I learned can actually be very applicable today. And it's about the understanding. It's about how the rules apply to you and using them to your advantage. So giving another example here, let's take a look at capital gains. And the long-term capital gains has a tiered system as well. 0%, 15%, and 20%. And if your income falls below the 96,700 range, you are in the 0% bracket. But if you're over that, suddenly you're in the 15% bracket. And that goes all the way up to the $600,000 before it jumps to 20%, plus the 3.8% net investment income tax, and it really starts to creep up from there. And this is where, if we plan ahead, it can really actually help. So if we're selling some investments, maybe it's something that we do over a couple of years, and that can actually help save a huge amount. Or the other elements that we take a look at here for if we have, let's say, some highly appreciated stock that we need to be working on. I call this tax alpha, and how we can be looking to make adjustments little by little, almost every single day, in selling and harvesting losses against some of the gains, and that can actually keep us in a lower bracket. And if you're a business owner, that's where we take advantage of the qualified business income deductions. And yes, it's there for 2025. It's going away for 26, but it may still be there. And we'll have to see if we make the Tax Cut and Jobs Act permanent. But that's where we have opportunities here as well, that you can see whether it's bonus depreciation or many other elements with equipment that we can be taking a look at for you as a business owner. It all comes down to how we can take advantage of the tax code and the planning that we can be doing. And that's the key to understanding these shifts before it really makes it happen. And so yes, we're in 2025. We just finished 2024, and we just finished the taxes, or your income streams, and you have probably yet to pay the tax for this year. But now we can start thinking about this year. We can start making adjustments already, and how we can make things easier. And that is really where we come from. The tax code is really designed to reward the ones that are prepared. And if we don't understand it, like say we didn't necessarily as newlyweds when we were filing taxes for the first time, if we do a little research, or if we call a professional, we could actually avoid some of these hardships with the IRS and all the back and forth and the unnecessary stress. And the principle applies today as well, that it's just understanding different elements like the alternative minimum tax and when that applies and when the phase outs happen, or when we're taking a look at all the different thresholds. The planning is the key that keeps us together here. And if we consider everything here, whether you're a retiree that's looking at all the capital gains you have, the Social Security, pensions, investments, all of those things and how they fall into your tax brackets, we can really start to figure out how to minimize your overall tax liability, see the big picture, and then we can make the right decisions that actually align to your goals. And looking back, my wife and I really do laugh at our first tax season, but it reminds us of how important it is to stay ahead of the game. And taxes aren't just something that you file once a year. They're a larger part of your overall financial plan. And that is the approach that we take, and we're going to be taking in 2025 as well, and how we can be working to maximize your deductions, how to navigate those brackets, and actually be prepared for the expiration of the Tax Cut and Jobs Act, potentially, or not, but we're here to help. We're here to help you turn the complexities that you have with taxes and give you some clarity. So if you want to walk through taxes a little bit more for everything that you're doing, give us a call and we'd be happy to really meet and talk through some of these things and some of the planning. And this is also something that we'll be doing in the first meeting of this year as well. So if you need to reach out to us, please do. We're here to help, because taxes may be serious, but there's always room for a little humor along the way. Have a great start to 2025, and let's make it a financially strong year as well. Take care.